How to spot rebound opportunities in decimated stocks. Today, we're going to talk about how to identify stocks that are down and out and ready for a rebound. I'm going to talk about what I look for the signs of a potential good opportunity versus the signs of a stock that's not a good bet. I'm going to give you 8 examples. Some are good, some are bad. And at the end, I'm going to give you my favorite example of this group. My name is Keith Richards. I'm President and Chief Portfolio Manager of Value Trend Wealth Management, and this is the Smart Money Dominance Show. And you guys know you're smart money because you're watching. I want to start off by noting that I got this idea to do this video on crushed stocks and how do I identify if they're opportunities or not by one of your comments. I do read your comments, and I'm always looking for ideas that are suitable for this channel, and I thought that's a great subject. Somebody actually asked me about one of the stocks we're going to talk about today. Now, I never answer questions in the comments on individual stocks, but I thought this stock, which happens to be United Healthcare, was a good example of a crushed stock that we could talk about and talk about whether it and 7 other examples are worth looking at. So please like and subscribe to this video and leave a comment because I read your comments and I read your suggestions for future shows. So let's start off with 6 steps to identify how to find successful candidates for stock rebounds. So we're going to go through each one. And the first thing I look for is I try to identify technical support. Now, I'm going to cover this in a moment through each of these stocks. So don't worry about the language too much right now, but we're looking for stopping points or potential stopping points of previous technical support. And we'll cover that in a minute. The next thing is I wait for a successful base and test of that support level. Then I watch momentum indicators and see if they're oversold and hooking up. And we'll talk about that again as we progress through this video. I watch for a breakout, and then I look for a target. So my targets based on these kind of down and out stocks are based on old overhead resistance. And we'll talk about that in a minute too. So don't worry if you don't know what I mean when I say technical resistance. Then I watch for what I call fades. I'm not the only one that calls it fades. If the stock begins faltering or fading, we got to exit the position. We'll talk about how to identify that. And then finally, how do I proceed if there's a point where the stock does start to fade? How do you stop out? How do you get out of the stock correctly without losing too much? So there's a lot to cover, and we're just going to go right to the charts, and we'll learn as we look at these charts. My first example is the Brazil ETF. Now, this is the only example of the 8 positions I'm going to talk about that is not actually down and out at this moment, but it's a good example of how Value Trend has played a rebound, and we in fact own this position right now. So I'm going to walk you through what we were looking at when we bought this position. And in fact, we have traded this position many times over the years, and you'll see why. So if we look at the chart of EWZ, which is the Brazil iShares country ETF, you can see that there is a level of technical support, which is where buyers come in and the stock likes to bounce off of. So that's around 21 bucks on this ETF. And you can see that that has happened many times. Now, it doesn't always hit exactly the $21 or so, close enough in most cases. So what we at Value Trend have been doing is we look for this particular position to come back to around that $20 to $21, $22 range. And then we look for a bounce or base off of that support. So let me describe. This is a base. So this would be back in 2021. It fell to our roughly $21 or so point. I think it was around $21.50. And then it went up and down, forming a bit of a base and then broke out. that's when we bought. So we look for confirmation that the support near 21 is going to hold and in fact move up. So in the most recent situation, we saw it hit, we gave it a number of days, and we started buying it up here. Okay, so we're up on the trade right now, but I just wanted to show you how we identified the bottom. Now the next thing we look for is the stock or ETF to move to an old resistance point. Now resistance is where sellers come in. So what we're seeing here is somewhere around $30, this Brazil ETF likes to stop out and often fail. Okay, it doesn't always hit the 30, you have to be aware, but it very often does. So our target when we bought EWZ was to buy it as close to 22 or 21 or somewhere near that as we could, and then sell it as close to 30 as we can. And as you can see on the chart, we're getting close to that point. So that's the basic methodology. And a couple of other things we look for are hooks on momentum indicators. I'm specifically going to show you MACD here, which when the ETF bounced off of that $21, $22 area, MACD hooked up. So too did MFI and RSI from an oversold situation and Stochastics. So when we have all of those ducks lining up, we can buy. Now, as the stock gets close to its highs, you'll sometimes see these momentum indicators round over, and we're just starting to see some of them look a little weak. So we may be selling this ETF very, very shortly. So our first example of a current stock or ETF that has been crushed that we want to take a look at is the marijuana cannabis ETF, which is WEED on the New York Stock Exchange. Now this ETF was trading in the mid to low 40s just about a year ago. You can see on the chart, it was up around the $44, I think, range, and it fell to a low of in the $5 range or so. That is quite a shellacking. So now we see that the stock has formed a base, or ETF I should say, and then you'll notice this level of resistance here. It broke that. It's broken out. So from our discussion on the Brazil ETF just a second ago, you know that I'm going to target something around that $40 to $45 zone. It could land at the lower end of the old zone. It could land at the higher end of the zone, but the target is somewhere between $40 to $45 on this ETF. Now, what were the signals that the stock was bottoming? Well, we had oversold MFI. We had a looping up from an oversold position on MACD. We had an oversold RSI that hooked up, and of course, full stochastics also hooked up from an oversold level. So when those hooks started to happen and the breakout happened, we had some pretty clear evidence that this ETF had some upside. We're going to now talk about, well, what happens if it fails? What I do is I look at the old breakout point, which on this ETF is between $14 and $15 as the support level, the new support level. So it broke out, so old resistance in the breakout becomes new support. So I don't want to see it fail $15. If I was in this position, which we are not at this point, but if I was in this ETF, I would not want to see it fail 15. So that would be my stop point. If it breaks below 15 by a few days, we'd be out of the trade. However, if it carries on and starts to get into the $40 range, we'd be starting to look for an exit point. Our next subject to look at is United Healthcare, which is actually the stock that one of the viewers asked me about. And again, I can't answer viewers' individual stock questions, but I think it's a great example for this show on spotting decimated stocks and whether they're opportunistic or not. So UNH used to trade somewhere very close to, it looks like around $600. And that thing fell to around $240 at its lowest point. Now it's picking up. You can see a few things right on the charts here, is that MFI was oversold, MACD was oversold. It's just showing very early signs of hooking up. We have RSI that was definitely oversold for a while, and it's hooking up. And we have Stochastics, which is still pretty low, but possibly showing a hook. So very, very early stage recovery. I want to see it break this neckline. Remember the last position we just looked at, the weed position? That stock, ETF I should say, broke its neckline, and that means that it's got lots of overhead potential ahead of it. We need to see UNH break around $320, which is this neckline, and stay above with positive hooks on these momentum indicators to suggest that we have the upside target of the lower part of the old support resistance range. So that brings us somewhere between $400 and $500 for our target. Not a bad target if it can break out. Keep an eye. Next example, Invesco Solar ETF, TAN, on the US market. And same idea. This was trading somewhere in the 70s plus range and fell to a low of around $27, and it appears to be rebounding. We did see oversold and rebounds on most of the momentum indicators, and it looks like this little neckline is attempting to break. It does look okay so far. One small sign of warning is Stochastics is rounding over a little bit, as is MFI, but not too serious because the general trends are up. So this one, I would probably give it a little bit of time, but so far, the breakout appears reasonably attractive. If that breakout can hold, you can see it targets right around here and then ultimately near the tops. Now here's a hot topic, Berkshire Hathaway. Never thought I'd say that this stock is a down and out candidate, but it certainly appears that way, and a lot of that has been discussed on a previous video. I'll put the link below where I discussed Berkshire Hathaway and whether it's an opportunistic play or not. Now, Berkshire reached a peak and fell, and it's attempting to bounce off of a level of support that was only briefly seen in April during Trump's tariff announcements, the original tariff announcements. So it does seem to be holding, and it does seem to be having some strength off of that. But if this level does not show genuine rebound, then I would anticipate it would go lower. Now, we held this stock, but we got rid of the stock because of the potential for this support level to break. I'm not overly pessimistic on it, but we found other opportunities for our money, plus we wanted to raise cash. Whatever the case, what we are seeing is the beginnings of oversold signals on MFI. We do not have a positive hook on MACD yet. There's small signs of the MACD histogram moving up, but way too early to be confident about that. And there's no real signs of RSI hooking up, and there's very, very small sign of Stochastics hooking up. So overall, I would say that Berkshire Hathaway is a stock that I would not at this point be buying as an oversold rebound candidate, because there's still lots of constructive movement we need to see on the stock before it shows genuine strength and potential for rebounding. Our next example is the retail store Target. Not too long ago, about a year and a half ago, Target was trading around $170. It fell to below $100. I think it hit around 90 something, and now it is trading just a little over $100. Now, from the chart perspective, there's a bit of a neckline here, and it doesn't look like it is breaking just yet. When we turn to the momentum studies, yes, they all got oversold and they all hooked up, but now we see some of them, like MFI and Stochastics, starting to hook down. And even when we look at MACD, if we zoom in a little bit, you can see the MACD histogram is kind of weakening right now. So I would probably say that even though Target is down and out, it may not be a great rebound candidate. I would give it more time. I wouldn't dismiss it as turning around, but it needs some more constructive work on the chart before I would be interested. Our next down and out candidate is good old CN Rail here in Canada. And as you can see, the stock used to trade around 170 and it's currently trading around 128. That's quite a drop, 50 bucks or so. Well, the problem here is even though one could argue it's getting oversold, if we look at old support levels, it looks like those support levels have been crushed. So my feeling is that the potential for the stock hitting its support levels going way back to 2021 is just as good, if not better, for this stock than it is to rebound. As such, I'm not interested in this formation. And you can see there's absolutely no sign of turning around. Here's the MACD, here's the RSI, and here's Stochastics. I didn't put money flow on it on this chart just because I didn't think it was necessary. The point is that this stock is not yet showing any signs that I, as a technical person, would be interested in buying it. If it started to base, remember that's one of our rules, I might take notice, but it isn't doing that yet. Our next example is copper, and you guys know that I have been talking about copper for some time. Now, I own the copper producers, and the copper producers actually look a heck of a lot better on the charts than copper itself. Now, whatever the case, we're going to look at the overall pattern of this chart, which is in a very gently rising uptrend. Is it failing that uptrend? Well, it depends on how accurate you think my trend lines I'm drawing today are. So I would say that it's testing the trend line. The drop has been magnificent. It's fallen from 5 to about 4.5. That's quite a drop. That's much more than 10% in just a very short period of time. So the issue with copper right now is that even though technically it's hitting a trend line, so it's not a disaster yet, but I'm not seeing any sign of rebound on any of the momentum indicators. They're all still heading down. So that tells me you might see a period of either a little bit more downside or some basing on copper before it finds support. It's not a disastrous looking chart at all, but I would not be buying copper looking for a quick rebound anytime soon. You need some more constructive activity before I'd be buying it. Now, I always like to leave the best till last, so I'm going to show you my favorite rebound candidate. In fact, I have mentioned this one on past videos. So I want you to take a look at the US dollar chart. Now, what's interesting is after the tariffs came out, the US dollar fell. We all know that. Well, it fell from around 110 on the world basket of securities, and it fell from about 110 to about 97. That's a pretty good drop for the world's largest and most traded currency. So that was quite a decimation for the US dollar. Well, what we're seeing right now, and if I zoom in a little bit, is a small upward trend on the dollar. And I did suggest a couple of months ago that we should expect the US dollar to rebound because it was getting so oversold. But what's interesting is the MACD indicator was giving us lots of heads up well ahead of this move. And that's one of the reasons why I liked it. And now we're starting to see a crossover on the MACD. We're also seeing a positive move up on RSI and a positive move up on Stochastics. All in, I think the real muscle will happen if the US dollar can break about 99.5, let's call it near 100 on this chart. If it breaks that, then you've got lots of different targets for us to follow. I do think that the momentum is behind the US dollar right now, especially as the tariffs negotiations start to come to an end. So my thoughts are that the US dollar will probably surprise a lot of people with its strength coming into the new year in 2026. So quick summary of what we've just been looking at. And remember my 6 steps, which is identify the technical support, wait for a base, wait for a successful breakout. And if that breakout happens, take a look at the momentum indicators, make sure they're hooking up from oversold positions, and then look for a potential target based on old resistance levels. Remember, resistance is simply where buyers have been selling in the past. So, got to watch for fades. In other words, if they start to hook down, we want to be cognizant of that. The momentum indicators can often give us clues ahead of time before the stock starts to hook down. So if you see momentum start to weaken, you may want to hold off on that buy trigger before going in. And finally, mind your stops. If the stock breaks down below a support level or below a neckline, an old breakout point, you probably want to get out. Thanks for watching. And again, don't forget, like and subscribe. It's really important to us on this channel to keep providing you with new material, and we're inspired to do so if we have new subscribers coming in. Thank you for those of you who have subscribed, and I continue to watch for your comments and provide you with the information you guys want. So a couple of announcements. On Wednesday, August 27th, I'm on BNN. I encourage you guys to phone in and ask your questions. Please mention that you watch my videos on YouTube. And I always tell the producers if they wouldn't mind pushing the people that read my blogs and watch my videos to the front of the line for questions, because we do get an awful lot of questions on BNN. So phone in and mention that you read my blogs or watch my videos, and we'll do our best to try to get you shoved to the front of the line. The next thing I wanted to mention is I'm going to be talking at the Canadian International Money Show, and that's in Toronto at the Metro Convention Center. That will be on September 13th, and I'm speaking at 4:30 in the afternoon. It's a Saturday. Now, I'm going to announce a special treat that I'm doing only for my blog and video watchers, and that is that I am going to, if you come to the Money Show in person, I'm going to do two things. A, if you come up to me after the show, because there's usually a number of people that gather around and ask me questions, and I'm happy to answer those questions. If you mention that you watch the Smart Money Dumb Money Show, or you read my blogs, I will give you, while quantities last, a copy of my very first book, Smart Bounce, for free. I will also autograph that book, and I will give you a code to get a discount that will last for the next 2 weeks to the end of September on my online technical analysis course. So there's lots of reasons. You have to be there in person. And if you can't make it, send a friend and you'll get your book, and we'll do the code that day only. So you have to be there in person. I keep saying that because I'm not going to give it away ahead of time. Thanks for watching, and we'll see you next time.